Hello, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, October 2nd, 2015. This week, lower prices were rejected at the support level for stocks, S&P 500, and the prices rebounded. However, bonds still outperformed stocks for the week, and we'll also look at dollar, which is unable to move higher. This, of course, is helping some commodities such as gold, while not really helping some other commodities such as natural gas. With natural gas actually hit a multi-year low this week, and also look at oil, which is still triangulating, sort of consolidating. All right, so let's look at S&P 500 SPY, which is a good representation of the general market. So this week we had a pretty nasty looking candle here on Monday, and we actually broke this support from September. But then on Tuesday we managed to kind of hold this support, and this was a bigger support level, of course, from late August low, and for now it looks to be as if it held, because afterwards we rebounded throughout the week, and even today on Friday we had a pretty negative jobs report, and initially the prices actually opened lower, but by the end of the session prices actually closed with a gain. So that's another reason why I like to use closing prices for making my trading decisions as opposed to intraday variations. So for now, looks like a short-term rally is underway. However, as before, I wanted to point some other indicators out. So this is a new highs, new lows indicator, S&P 500. We had breakdown and the new lows were expanding. So far there were no new highs registered. Well, percentage of new highs was still at 0 as of October 1st. Actually, let me refresh this chart, and no, it's still October 1st. So it's still kind of negative, and this is bearish. Also, the advanced decline line, I pointed this out last week, actually broke below the August low. So this was a bearish development as well. Okay, let's look at next chart. Next chart is the actual index, S&P 500. And this is a little bit longer chart. So dominant feature of the chart still is this big drop, and then a rebound in the shape of a wedge. Here in mid-September, the prices touched the 50-day exponential moving average and then were clearly rejected. Now, if we look a little bit down here, I have three indicators: stocks above the 20-day moving average, above the 50-day moving average, and the 200-day moving average. And the way I look at it is, during the bull markets, the percentage of stocks above the 200-day moving average should go above 60%. This line right here, 60%, and at the very least stay above the 40% mark. Now here in August, when we had the plunge, this indicator actually dropped below 40%. So by this token, the market is actually is either correcting or in a bear market. And the same goes for 50-day moving average, similar picture. So if we say that now the stock market is in a bearish posture, I will be looking for overbought conditions within a bigger downtrend. And this condition manifested itself right here in mid-September when the percentage of stocks above the 20-day moving average moved above 60, actually above 70% here. And this is exactly when we had this shooting star here. And then when the percentage of stocks above the 20-day moved below 50, this was a good signal. If you were able to go short here, this was a nice decline here. Now the 20% moving average, percentage of stocks above the 20-day moving average, is actually already at 53. So while the other two are still in a bear market territory. So basically, as before, if my premise that we're now in a bearish market is true, then we will look for this indicator to come about to around 70% and then plunge down. And this is basically a similar setup to this. If this happens, especially if it fails around the 50-day moving average and knocks back down, a retest of these lows again is almost a guarantee. And next on the agenda is bonds, TLT, iShares Barclay 20+ year Treasury Bond Fund. So my buy point was here in mid-September, and since then there was a pretty nice substantial gain here for bonds. Bonds don't move as much as stocks, but TLT moves quite a bit of, has quite a bit of volatility in it. Now on Friday today, it was not a particularly inspiring candlestick because in the morning the prices gapped up, they attempted to rally, but then the entire day afterwards, sellers dominated. So the price actually closed lower than the open, thus this black filled candlestick. Now, as I mentioned before, this is not a particularly inspiring candlestick, but then again, bonds don't move as much. So for now, bonds are still leaders of the market. The stock chart technical rank is above 90. So there is still quite a bit of fear present in the markets if I was to look at this chart and other charts of bonds as well. On balance volume broke out right here above the previous peak, and this is an interesting divergence. You can see that the prices did not yet make a higher high, but on balance volume, the volume pattern is showing that money is rotating into bonds. Okay, next is United States dollar. So this is a dollar index. So basically not much of a week, which is kind of had sideways action. We attempted to break below today on Friday, but the prices the dollar bulls actually pushed the prices back up. Now, we had 3 tests of this support here in the $93 area, so I would not be surprised if we get another one. And for now, we're holding the support level, and even this support break looks like we immediately came right back up. So if you are, this could be like a flag, a flag formation, and if this flag breaks to the upside, above, I don't know, let's say 96.5, 96.75 here, then we could see a retest of these highs. Now, alternatively, there seems to be some, downward pressure in the dollar, and we could again retest the support levels here. If dollar does nothing, can just trade sideways, or if it decides to retest the lows here, then commodities will surely benefit, and gold is certainly one of the commodities that will benefit. So let's look at gold next. Okay, so this is the price of gold, spot price daily chart. Now, for the past few months, I've been saying that there is basically a bottom of some sort, maybe intermediate bottom that was put in here. And overall, this still is a bearish security. Prices are still tending to move from the upper left to the lower right, and this red moving average with the 50 is below the 200. So it is clearly still a bearish security, but there is no denying that there is some bullish action happening. And you can see here 3 rising bottoms, so to speak. So I even drew a trend line through the bottoms here. So this is a positive development for gold bulls because number one, we broke out here and retested. We attempted to retest this low and held in this area here. Then again, we attempted to break out, failed at the resistance, but at the very least, it held this higher low. So we have now 3 higher lows, and Friday's action is actually very very strong looking candlestick. So if we see any more upside, then obviously there is resistance level coming in at 1170 here. But if we break out above it, then we could potentially move even above this green, which is a 200-day moving average line, and potentially even retest this high from from back in June, and even maybe higher from May. Now, if we break out above these highs, I will need to reassess the entire posture on gold. It's entirely possible that this is indeed a multi-year low in gold. At this point, I'm still treating this as an intermediate low, and I will be looking for shorting opportunities, but they are not there yet, and I will be looking for them in the near term. But also, once again, I'll have to be cognizant that indeed this could be the multi-year low, and maybe the entire gold market is ready for it for a turnaround. All right, next let's look at GDX, Market Vectors Gold Miners ETF. So, obviously gold miners are tied to the price of gold, and they are a lot more volatile than the gold itself. So, for example, as in previous chart, I showed that gold gained about 2%, and Friday, today's action in GDX gained 8%. So, it's a strong, very strong looking candlestick, certainly. So this is, action on gold miner is actually one of the reasons why I am not yet ready to short gold, is because the action is quite strong here. We did, however, hit a multi-year, or rather a new low in advanced decline line and advanced decline volume line here. So this was a worrisome development because we haven't yet broken the support, but the breadth actually is leading the market lower. So I was a little concerned here that we may break down. And actually, I mentioned this last week, and I think a week before that as well. However, it seems that the gold bulls are rather dominating the market action right now, and we seem to be moving higher, or at the very least not dropping. Now, this on balance volume indicator is showing a similar pattern. You can see that the market consolidated sideways while the on balance volume actually pushed higher. But the biggest one, of course, as I mentioned in the past, is bullish percent index, which was at 0 here in let's see when this is, late July, and then again in late August. So basically, it cannot go any lower. So, and then we had a bump up and a movement higher. So bullish percent index is it's showing how percentage of stocks are on a point and figure buy signal, and you can see that there was at 0, and then they started moving higher, and then we had a rally here in late August which petered out, but then again we have another rally moving on, going on right now. So for now, short term, I'm bullish on GDX. Long term, of course, as with gold, clearly still a bearish security. We had a tremendous drop here, multi-year lows, if not all-time lows. I don't remember. This was a very, strong drop. Now, multi-year lows, all-time lows, 52-week lows are a sign of a weakness, and it's not necessarily a sign to pick bottoms, because all of this here were 52-week lows. So, if you were trying to pick the bottom here with 52-week lows, you would have been wiped out many times over. It's very difficult. However, at this point of the game, at the very least, there is some strong support in the $13 area. We had 1, 2, 3, 4, 5, 6 tests of this area, and so far we held all of them. So $13 area is somehow important for GDX, and it seems to be holding. Now today's gain of 8% was very impressive as well. So for now I'm bullish on GDX short term, but long term it's still in a bear market. So this could be one of those powerful bear market rallies. Where it will peter out, who knows? We need to look to gold for clues. A good place to fail for GDX would be, of course, here at the $16 area. Another excellent place to fail would be here in the $18 area. There is broken support here in the $18 area, and 200-day moving average is coming in here as well. Next, let's look at one of the commodities I occasionally trade. I don't trade it all the time, but this was one of those opportunities that I thought would be nice to take. So natural gas is still very much bearish, and we had like a bear market rally here in May, and then it kind of continued here in July and August. But here I thought this was a clear, to me this was a good place to go short. I actually went short here. This was, I think, 16th or 14th of September. I don't remember exactly when, but this was a nice bearish setup. I went ahead and took it, and then it consolidated here and held for a little while, and even here I thought, uh-oh, maybe my position will get closed out, but actually afterwards the price was rejected here on the 14th of September. We moved to multi-year lows. I took profits because I usually take three profits. I have three profit targets, so I already took first two profit targets, and I have a remainder of position riding it out, see if maybe we'll get even lower prices in natural gas. Okay, and then finally we had a reader asked a question about light crude oil, WTIC. So multi-year lows here in late August. Of course, multi-year lows, as I mentioned, is a sign of weakness and a sign of bearish security. Now here we had the multi-year low, then rebounded, and this pattern is called three white soldiers, three big white candlesticks. So this was a strong rebound that took oil from 37 something to $49. So this is pretty powerful rally. And once again, those bear market rally could be very strong. So if you're shorting, you have to be quick to exit, and basically that's what's happening. This is a bear short covering rally. Now, since this is still a bearish security, I'm looking for overbought conditions within a bigger downtrend. I think this overbought condition has already manifested itself here. I went ahead and opened a small position here in SCO, short crude oil. So far it really hasn't gone anywhere and it's still consolidating, sideways. If we break out above, then my small position will close. If we break below, then I'll add to this small position that is open right now. If we break out, then a logical target would be this 50-day, 200-day moving average around $51, possibly even higher to 56, to the broken support area, 56.58. However, the opposite is also true. If we break below, then we can easily retest these lows and possibly break below them. All right, let me quickly show you how to find us on the internet. Please go to MasterChartsTrading.com. We are starting our trade alert services on next Saturday, I believe, October 10th. So if you haven't done it already, please subscribe to our mailing list, and you will receive a discounted membership not offered to general public. if you have, we have obviously have a blog here and video section, so all of this information will be posted there. In the future, the video will be most likely more abbreviated for the general public and more in detail for the details for subscribers. We have a public charts and social page, so there you'll find links to many of the charts that I mentioned here in the public charts page. But also we have links to our social media accounts. So if you have Twitter, Facebook, YouTube, or StockTwits accounts, please join us there. Thanks for watching and have another great trading week. Bye-bye.